Welcome back to Thrifty Finance Vision PH. Today, we're discussing an essential topic for investors in the Philippines: bond funds. If you're looking for a stable investment that offers steady income, then this video is for you. Let's get started. Bond funds in the Philippines serve as a significant investment vehicle for those seeking a balance between risk and return, with a primary focus on capital preservation and generating steady income. But what exactly are bond funds? Bond funds operate by pooling resources from numerous investors to create a diversified portfolio of bonds. These can include government securities, corporate bonds, and other fixed income instruments. The main attraction of bond funds lies in their ability to offer regular income through interest payments while maintaining a lower risk profile compared to equities. This makes them particularly appealing to conservative investors or those nearing retirement. Bond funds in the Philippines are typically categorized into three main types: government bond funds, corporate bond funds, and mixed bond funds. Government bond funds primarily invest in Philippine government securities such as treasury bills, treasury bonds, and retail treasury bonds. These are backed by the government, making them a low-risk investment option. On the other hand, corporate bond funds focus on bonds issued by reputable Philippine corporations, offering higher yields, but with higher credit risk compared to government securities. Mixed bond funds provide a diversified approach by investing in both government and corporate bonds, aiming to balance the risk and return for investors. Now, let's talk about some of the leading bond funds in the Philippines. These include the BDO Peso Bond Fund, BPI Philippine Premium Bond Fund, Philam Managed Income Fund, Metrobank Bond Fund, Sun Life Prosperity Bond Fund, and First Metro Save and Learn Fixed Income Fund. The BDO Peso Bond Fund, managed by BDO Trust and Investments Group, is renowned for its blend of government and high-quality corporate bonds, targeting capital preservation and stable income. The BPI Philippine Premium Bond Fund, managed by BPI Asset Management, focuses on investment-grade corporate bonds, known for their higher yields. Philam Managed Income Fund, managed by Philam Asset Management Inc., is lauded for its diversified portfolio and consistent income generation, making it a preferred choice among investors. So, what are the advantages of investing in bond funds? For starters, they offer diversification, professional management, and liquidity. Diversification helps mitigate risk by spreading investments across various bonds, reducing the impact of any single bond's poor performance. Professional management ensures that investment decisions are based on thorough research and market analysis. Additionally, bond funds are more liquid than individual bonds, allowing investors to buy and sell shares more easily. However, it's important to be aware of the associated risks. Interest rate risk, credit risk, and inflation risk can all impact performance. Fees and expenses, including management fees and entry-exit fees, can also affect net returns. To invest in bond funds, you'll need to open an investment account with a bank, investment company, or brokerage that offers these funds. Select a fund that aligns with your investment objectives and risk tolerance, meet the minimum investment amount, and regularly monitor the fund's performance. In conclusion, bond funds in the Philippines offer a compelling investment option for those looking to achieve a balance between income generation and risk management. With a variety of funds available, such as government bond funds, corporate bond funds, and mixed bond funds, you can choose according to your specific financial goals and risk tolerance. Leading funds like BDO Peso Bond Fund, BPI Philippine Premium Bond Fund, and Philam Managed Income Fund provide reliable options managed by reputable institutions. If you found this video helpful, give it a thumbs up and subscribe to our channel for more financial tips and advice. Thanks for watching, and see you in the next video.